Neil Haley's show and the Cutting Edge Benefits podcast, where the host Tom Quigley of Claim Links. Tom, here we go. We're getting down to the busiest time of year for you, isn't it?
Usually it's real busy. It is now, but busy's good.
It's good to be busy, and countdown is coming, and we're getting to the end of the year, and people have to decide on health insurance. So our topic today is how to save 30 to 60% on health insurance with a smarter plan design. Most employers think high premiums are unavoidable. Why is smarter plan design the key to saving 30 to 60% on health insurance?
Because the math that the insurance companies use is like voodoo. So what I mean by that is they're overcharging you for the offices of copays, the drug copays, the emergency, all the copays. And what people don't realize is they can go with the same insurance carrier to the lowest cost option they offer with the same network and literally do that part themselves more efficiently and more logically and save roughly 30 to 60% doing so.
And that's key. I mean, the ability to save money, especially going into next year, is very important for a company and looking at their bottom line.
You would think, but man, some of the people who are accepting these rate increases, you just sit there and you're like, why? Why would you do that? Why would you? What they do to lower the cost is they increase the deductibles and the copays for the employees. So the employees lose, they're asked to pay more and they get less.
What are the biggest cost drivers inside a traditional health insurance plan that businesses don't even realize they're paying for?
The PBM of the pharmaceuticals. The insurance carriers are getting rebates on all the brand name drugs and then using the data against you.
Explain how they're using the data against you.
Well, they know they get reports from their vendor they use for their pharmacy, and the vendor gives them all the usage. The people are using, a generic drug, take cholesterol, blood pressure, or diabetes. Well, the insurance companies turn around and jack the rates up 5-10% on everybody because of that. So why show it to them when you don't have to?
No doubt. How does Claim Links restructure a company's plan to immediately reduce healthcare costs without reducing coverage?
We go in to the highest deductible and we put in what's called a Medical Expense Reimbursement Plan underneath that allows the employer to self-fund the part they were being ripped off on, and it's still tax-free to the employees and a write-off for the employer.
Very, very good. And then that's how you teach them how to structure those things and work together. You don't just disappear, Tom, at the beginning once you get them on board. You're there hand in hand to make sure that it's all put together so that they're following the right traditional protocol for how to save the money.
You have the service team and everyone to do it. We're not like Casper the Friendly Ghost.
That's a good one. Okay. Can you explain how alternative funding models outperform traditional group plans when it comes to long-term savings?
Traditional funding methods don't work. They haven't worked since the HIPAA laws. So the insurance companies are trying to keep people buying it the same way through their health insurance agents, who they reward monetarily by the increase in premiums. So the alternate methods will last because those are people following the laws to a T, and the laws, you can't help but save money with the Affordable Care Act law.
And you can see also in the payment side of things, Tom, basically you don't get paid until they save money. That's the big model that you go by.
Yes, exactly. I don't save you, I don't make any money.
Absolutely. Okay. And let's go on to, do you have an example of a small business that saved 30 to 60% through claim links, and what specific changes drove those savings?
Yeah, I mean, routinely that's the average savings. It depends on the company. Depends on how aggressive or how conservative they want to be. The aggressive approach is you have fewer than 50 employees. Make your plan unaffordable. Let people get subsidies if they qualify, and those who don't want them, give them a raise. And they take it out, still pre-tax, or everyone wins, and you use the medical expense reimbursement plan to get better benefits.
Okay. All right. So what steps, as we're going to, what steps can small business owner take today if they want to start saving money on health insurance right away?
The first step is they've got to come to realization their friendly agent, or the friendly ghost, so to speak, is not helping them. And they have to realize that by keeping them, it's costing them hundreds of thousands of dollars in some cases, millions in some cases. And they got to come to realization that the owners have to get involved, and not leaving it up to the HR directors who love, the ghosts, the Jaspers, the ghosts.
Got it. So go to claimlinks.com and schedule a call with Tom's team today, and they're going to be able to break out on plans so you can save 30 to 60% on your health insurance as a company and provide better benefits for your employers, which is huge for your employees. All right. Appreciate it, Tom. That was a special simulcast of the Neil Haley Show on the Cutting Edge Benefits podcast, guys. Take care.